Morning, trade pros. Welcome to our morning market update for December 18th, 2018. This is George Trade Pro Academy. Um, let's get started today with a morning market fun fact. On this day in 1899, the Dow suffered its fifth worst daily percentage loss of all time. On news of many casualties in the battle against rebels in the Philippines, the index plunged 8.7% or 5.57 points. It's crazy that represented 8.7%. The Dow closed at 58.27, 58.27. Oh, how times have changed. Overnight levels stay for the S&P 500. It dropped to 25.33 half, just 4.5 points from the lows of February in 2018. So we almost got to annual lows where it reversed rather dramatically to the upside in very suspect-like behavior. There's suddenly a ton of buyers down there. It smells like the PPT to me. All right, the market closed at 25.57. Overnight high was 76 quarter, so it went up a couple handles from there. Huge resistance at 2,600 even on the SPOOs right now. I think we're gonna get a nice little short squeeze on the open, so some upside and sell rallies on the S&P 500. All right, oil prices down 3.3% overnight. We traded all the way down to $48.13 per barrel on West Texas Intermediate. Yesterday's pit session closed at $49.48, and the overnight low traded down to $48.13, like we just talked about. All right. So, given the circumstance and how bearish oil is, given the fact that we're not getting any supply cut out of the production agreement until January, and the market remains oversupplied in the month of December, and there's reports out there Saudi Arabia is selling more and more oil. So it's just bearish. It's a bearish market. Sell rallies. Support blows at 47.55 to the downside. The US dollar, 96.73 support below. We're getting a formation of higher lows, but equal highs at the 2018 high of the session. And we could be looking for a breakout. However, the FOMC, the Fed meeting minutes, and the meeting hike tomorrow, the rate hike tomorrow, starts today. It's a 2-day meeting. So that's going to have some impact for sure. Currency traders, you have to expect volatility. Keep those stops a little bit tighter throughout the next couple sessions. And the real opportunity comes after the FOMC. Don't try to predict. You don't know what the FOMC is going to do. You don't know how the market's going to react. Stop gambling and trade like a pro. Wait till after the fact. You can reposition and have some great opportunities. In today's markets, Japan's down 1.8. Hong Kong's down 1.1 as well. China down 0.8%. India's up 0.2 percentage point. In Europe, at midday, London's down 0.4%, 0.2 down in Paris, Frankfurt bidding 0.2% as well. And the United States, Dow's up 0.3, S&P's up 0.3, Nasdaq's up 0.3 percentage point. So some gains early on here in the U.S. We're seeing a slight rebound, bearish markets overall. Russell 2000, the small cap stocks index, officially hit bear market territory yesterday, down over 20%. So if you're wondering, is this a market crash? Or is this just some selling that you should be buying the dip? The answer is absolutely no. This is a market crash, and you shouldn't be buying the dip. In yesterday's session, it became official. The 2,000 small cap stocks, or the smaller capitalized, is what CAP stands for, traded into a bear market, which means money's getting out of a stock market that tends to lead. Smaller companies struggle worse and earlier during a recession, and you're starting to see those results right now. With the Russell leading the way lower. That's a big damage that was done yesterday as it traded the bear market territory. All right, gold prices up slightly. Bitcoin's up 7%, although still just at $3,400 per coin. Like we said today, the FOMC meeting minutes. FOMC meeting begins. Housing starts this morning at 8:30. Came out at 1.26 million versus 1.228, so pretty strong number coming out there, and building permits were up as well. However, prior number was revised lower from 1.228 to 1.217. Still doesn't offset the headline beat today, so strong number there. All right, Redbook chain store sales coming out at 9. Nothing else. They should already be out. Nothing else on the news docket, so you're getting nothing but technicals. Technicals are driving the market, and any other kind of news from Donald Trump, right? He tweets. Donald Trump voicing his displeasure with the Federal Reserve's hiking and saying it's not the right move to do. It's the reason the market crashed. Okay, let's talk about the Fed. In September, Jerome Powell said that we're far from neutral. You know what? At the current rate, we're far from the neutral. We got to keep hiking. The market freaked out and dropped over 12%, 12%. Huge sharp sell-off right after he said that. And late November, Powell back course and he said backpedaled, said, "Hey, rates are just below neutral," and a complete reversal of his sentiment because the stock market crashed. The market crashed. He looked at it and he said, "Oh shit, I got to say something different," and so he did it. Translation: the Fed doesn't really know where these rates are going. What they do know is that they're going to raise rates. They don't know where they're going to end up. They know that they are going to continue to raise rates. So we're looking for a dovish hike tomorrow. That means that he's going to hike rates, but probably talk down the economy off of a ledge because apparently the stock market can't handle interest rate hikes. And I'll tell you this, everybody knew it couldn't handle them. There's no way that this stock market can sustain the kind of rate hikes they're putting into it. The United States will have record low interest rates probably by the time I retire until 2050. Mark my words, we ain't going to cross 5%. I don't think we'll ever cross 5%. Look at Japan, all right? We're in trouble, and we know it. Everybody knows it. Qualcomm believes Apple remains in violation of a Chinese court order. Look for Apple to be pretty bearish today. Apple tried to push a software update on Monday to go out and say, "Oh, well, we no longer violate the court order." Nice try, Apple. It's a legality issue. Qualcomm's lawyer said that's not enough. You got to pull your hardware sales. So now they're going to really have to stop selling hardware units. They're older models in China, but older iPhone models sell better in China than the newer ones because of their price point. Who could afford a $10,000 iPhone? Honestly, that's iPhone 11. It's getting ridiculous. So anywho, their court order was violated, and so now Apple tried to do a software update. Qualcomm cried a foul. Now they're going to have to pull the hardware, or we're going to see what the next step is. Maybe we're going to try another software update. This is crazy. It all stems from patents on software features like switching between smartphone apps and resizing pictures before setting them as a wallpaper. How many people resize a picture to create a wallpaper? I mean, zero here probably. Have you done it, Victorio? Victorio's done it. He resized it for sure. He's a millennial. He's all right. China news just in. China cuts its holdings of U.S. Treasuries by $12.5 billion in October. And somebody's going to say this is proof that China hates the United States. They're getting rid of their treasuries. Of course they are. It's a fifth consecutive month of decline. I'll tell you why. Does China hate the U.S.? Not at all. All right. Let's do the math. Less exports from China to the United States. What does that mean? Less revenue for China. Less revenue means they have less U.S. dollars. Less U.S. dollars means less purchasing of treasuries. Less purchasing of treasuries means the United States needs more capital to fund their widening and massive deficit. All right. Less need for capital means more treasuries get issued. More treasuries get issued, less people want to buy them. The yields have to go up. Yields go up, borrowing costs increase for the U.S. government, which in turn means they need more treasuries. See how the problem goes? It just keeps going, spiraling out of control. So China doesn't hate the fact that well, I don't know what they feel about the U.S. because I'm not China, but it's not. The issue here is not that they have this trade war going on. The issue is they don't have U.S. dollars to buy stuff with. And China doesn't like U.S. treasuries just because they're a good investment. They like them because China's got dollars, U.S. has treasuries, and they've done business together for decades. Now that's no longer the case. China's trying to figure out a different strategy. So a shortage of U.S. dollars for China has pushed the dollar up. All right. It's an interesting situation that's going on. So that's what you got your morning market update. Sell rallies today. It's going to be a bearish day. A little short squeeze on the open as we push out some short sellers near the lows and just keep selling rallies, man. That's and women, man and women out there. Sell rallies. This thing's going to continue to the downside. Christmas rally ain't going to happen. Even if it does, it's not going to erase the December loss. It looks like we're off to the downside here. We're running out of time after this Friday. We don't have too many market days left, just 4 trading days after. So you're seeing tax loss selling right now coming into play, which means losing stocks are being sold off to crystallize losses for tax purposes. That's pushing markets lower. There's a lot of redemptions that mutual funds and hedge funds got to sell stocks to pay back clients in cash. There's a ton of stuff going on. And whenever we don't have a Santa Claus rally to rebound, it looks ugly in January. This could be the beginning of a pretty dirty bear market to the downside, equivalent to what we saw in 08. All right. And if you look at that, we're just 1/3 of the way down. We could go down 30 to 40% plus. I did some more of the math on the S&P ending up at 2250 to 2300. Sounds crazy until it happens. I'm always crazy in the eyes of people until it happens, and then they're like, "Oh, you were right," and then I tell them the next thing I'm thinking like, "Oh, and then that's crazy." I'm not trying to not be crazy. I love being crazy. If you guys think I'm crazy, put that in the comment box. See you later. Have a great day. Manage your risk. Goodbye. Over and out, Vicky. Over and out.